Good morning, Laura. Okay, looks like we are coming on board. And so I just want to thank everyone for joining us this morning. My name is Drake Pfeiffer. I am the business forward consultant for Oakland Thrive. And Oakland Thrive, for those of you who are not aware, is a nonprofit that serves as a support arm to the Oakland County Economic Development Department. And we fan out and spread out throughout the entire county of Oakland in support of solopreneurs, entrepreneurs, and small businesses who we are, as suggested by our name, helping to thrive. And we do that by connecting businesses with resources as well as capital. And in this case, today, we are connecting you with one of our obviously, we're having a workshop today, but this is a workshop with one of our very prized B2B consultants, Ms. Leslie Jones, who is a CPA, certified public accountant, who is going to discuss today the formation of legal entity, which is at the basis of starting a business. And so she's going to really, for those of you who are looking forward to get your start in making and forming your business entity, or if you're going to be doing any kind of restructuring, Leslie is going to be able to speak to those things today. I'm so excited to have you all as our guest. We will be providing you with a survey after today's workshop, and certainly look forward to you joining us for more. But on that note, I am going to allow, and this is a picture of all of the team members that I have on my team. Again, for those who are on, I will mention that I cover Novi, South Lyon, Northfield, as well as Wixom. So if you are on this call and you're in any of those areas and you need assistance with your business, I am the person for you. But without further ado, I am going to pass the mic to Ms. Jones so she can take it away. Are you ready, Ms. Jones?
I am. Thank you so much.
Thank you.
Good morning, everyone.
Morning.
So I'm just going to jump in. It's only a handful of us, so feel free to stop me during the presentation if you have questions. It could be more so of a conversation. I'm going to share my screen. All right, so hopefully everyone can see my screen. So what we're going to discuss today is let's see, legal entity formation. The importance of legal entity formation, it determines the legal and financial responsibilities of the business. It influences taxation, liability, and operational flexibility, and it provides a framework for governance and ownership. So when you have an idea, you say, okay, I want to start a business. These are all of the things that you want to consider when you think about what entity works best for my business. Based on these factors here, and your financial and your business goals as well. So there are three major legal forms of business. You have a sole proprietorship, you have a partnership, and then you have corporations. So what is a sole proprietorship? So that's going to be your simplest form of business ownership. It's owned and operated by one individual, which is also personally liable for your business debts and all the obligations, but there's no legal distinction between the owner and the business entity. And so what that means is when you're running this business as a sole proprietorship, everything is sort of commingled. So your income and all of your debts, you're responsible for it, just as a sole person. So say if you have a personal credit card and you have a business credit card, you're all responsible for that under your own social security number. So that's what a sole proprietorship means. And even when you file your taxes, your business activity is filed on that individual return. So what is a partnership? I'm sorry, my mouse is a little sensitive here. So a partnership is formed when two or more individuals or entities come together to run a business. You have the general partnerships, which share profits, losses, liabilities, which is also based on a percentage of ownership. A limited partnerships involve general partners and limited partners with differing owner percentages. So when you have a partnership, so say if you are, just say three people form one entity. By IRS standards, the default entity is going to be a partnership. You would file an information return to the IRS, and each partner will get a schedule and take their particular percent of ownership based on profits, losses, and liabilities, and they will report that on their personal return. Normally, when you have a partnership, you also will have articles of organization, and those articles of an organization, that'll define who's responsible for the profits, who's responsible for losses, and it'll also identify that percentage of ownership. And that's where you'll also determine the general partners, like what exactly are their responsibility. Most of the general partners will have more so managing capability within the partnership. The limited partners are sort of the overseers, or like the silent partners. And then what is a C Corp? Which is also a corporation. So a corporation is a separate legal entity distinct from its owners that you can also consider its shareholders. A corporation, it offers limited liability protection to shareholders. It requires the articles of incorporation, and it requires compliance with formalities like shareholder meetings and record keeping. And it's also taxed separately from its owners, resulting in potential double taxation. So a corporation, it could be a public corporation or a private corporation. A public corporation usually has public stock where anyone could pretty much buy into the corporation. A private corporation, though, is going to be just private for those particular shareholders, mainly those who form that corporation. The biggest distinction with the corporation and a partnership and a sole proprietor is the corporation has its own tax filing, but it's also has its own tax liability. So the difference is with a sole proprietor and a partnership, those taxes are actually flowing through. With the sole proprietor, the taxes is reported on the personal income tax return. The partnership, each partner receives a schedule, and that's actually reported on their personal return. And this is the biggest difference with the corporation. The actual corporation is taxed. So we have our own separate tax filing for the C Corp, but the corporation itself is taxed. And the reason why we say, so what is the double taxation? So those shareholders, a lot of times they may receive a salary or they may receive dividends from that corporation. So the shareholders are taxed on those dividends and maybe their salary, but then also that C corporation is also taxed on that return. So that's why we have that double taxation with the corporations. Anyone have any questions about the C Corp, sole proprietor, or partnership?
Can you hear me?
Pardon me?
Can you hear me?
I can now, yes.
How many people do you have here? Am I the only one?
I don't think so. I think there's others
Yep.
on.
Yeah,
Oh,
there
okay.
are about 13 folks here.
Oh, good. Because I can't. Okay. Anyway, I appreciate you very much, but I'm looking just to start a small business and just selling craft items, and legally what's the best liability for me. And it's not necessarily any corporation. I had somebody tell me that I would probably want to have a C Corp instead of an LLC.
Yep, so I'm gonna go into the LLCs and the S Corp in just a second here. And then I think once you hear the rest of the presentation, you may be able to determine and then potentially have additional questions afterwards, if that works.
I appreciate you very much.
No problem. All right, so here is a comparison of a sole proprietor, the partnership, and a corporation. So the ownership for a sole proprietor, just like I mentioned before, is one owner. Partnership is two or more, and a corporation can be thousands of owners. The life of the business for a sole proprietor, it's going to end when the owner is unable to carry on. For example, if they pass away or if they close the business. Partnership, pretty similar. The life of the business will end either when someone passes away, or if the firm closes, or if the partners start to withdraw from the business. A corporation, it's going to continue indefinitely. It ends either when the business goes bankrupt or if the stockholders vote to liquidate the company. And then this is the most important piece, where we determine who's responsible for those business debts if the firm is unable to pay. So with the sole proprietor, like I mentioned before, there's no distinction between the owner and the business. So if your business is unable to pay, then the owner will be responsible for those debts. With the partners, that responsibility is usually outlined in those articles of organization, with partners individually and jointly. And then with the corporation, the stockholders can lose only the amount that they invested in that corporation. So these are the other considerations when you think about forming a business. There is something called a limited liability company, which is also known as an LLC. It's pretty popular now with our new businesses. And then you also have an S corporation. So what is a limited liability company? A limited liability, it combines features of partnerships and corporations. It offers limited liability protection to its members or owners, requires articles of organization and an operating agreement. It can be a sole proprietorship or a partnership. And then what is an S corporation? An S corporation can be a sole proprietorship, a partnership, or a corporation. An S corporation, it offers limited liability protection to members and its owners. Its major advantage is pass-through income to shareholders, where there will be no double taxation, like that example that I mentioned with the actual owners getting taxed on either dividends or their W-2 wages or even distributions. Whereas with an S corporation, all of the income is considered pass through and is taxed at a lower rate. However, with the S corp, the IRS has a lot of different criteria that the shareholders must follow in order to, reap the benefits of an S corporation. So when you think in terms of what type of entity would you want to form for your business, these are some of the factors that you want to consider. The liability protection. So how much personal liability are you willing to assume when you think in terms of forming your business? The taxation, you want to consider the impact of taxes on the business and its owners. Management and control. Determine the desired level of control and decision-making authority. And you also want to consider the compliance requirements, because there are a lot of, different rules and regulations, especially with the S corp. One of the things that I did want to go into a little bit more is the LLC. So a sole proprietor, like I mentioned on the previous slide, a sole proprietor can be an LLC. That's going to provide the limited liability, where it'll protect the individual from the business's debt. So what I mean by that is, using that same example, where if you have a personal credit card, if you have a business credit card, under your business, if you have that business credit card, just considering the terms of the credit card, those business debts, you would not be responsible for that under the LLC. The debts of the business would not become your own under an LLC. So when that's why the LLC has become a lot more popular, especially with sole proprietors. The good thing with an LLC is if later, so say if you're a sole proprietor LLC, if later you say, okay, I want to become an S Corp, you can also be an LLC and an S Corp. But you have to meet certain criteria with the S Corp. One of the other differences is also once you become an S Corp, even if you are a sole proprietor LLC, there's also still another tax return that you would be required to file. So say you start out as an S Corp, for example, I'm sorry, as an LLC. I'll use myself, for example. So when I first started my firm, I'm a professional liability company. So the company is growing. As I'm looking at my financial goals and business goals, it made more sense for me to then turn my professional LLC into an S Corp. But I'm under the state of Michigan, I'm still an LLC, but I'm treated as an S Corp because I elected the S Corp status with the IRS. So now my business tax return is completely separate from my personal. So when I first started, I was filing everything together on one return, even though I was still an LLC. I still had some, limited liability there, but now I have a completely separate tax return, which is an S Corp return. And then the net profits or losses is considered pass-through income, which I now report on my personal tax return. So the difference is you become separate and you're taxed a lot different. Another thing to note as well, that using the same example, even if you start out as a partnership can be an LLC. So your partnership LLC, partnerships have an information return that they're required to file as well annually to the IRS. But if, depending on your business and your financial goals, you may want to say, okay, I think I want to move to an S Corp, obviously with the advice of a tax professional or your attorney. Once you move to that S Corp, you'll then have that S Corp return, you'll receive a schedule, and then each owner of the partnership will use that and report those profits or losses on their personal tax return. Same thing with a corporation. So even though the corporation always has its own tax return, that C Corp, you eliminate the double taxation because now that corporation is not taxed as a C Corp, it's taxed to the individual owners of the C Corp. But one of the things that you have to consider if you are a corporation, and you can only convert to an S Corp if you have 100 or less members. So if you have a corporation out here that has thousands or, publicly traded and thousands of investors and owners, that corporation does not qualify for S corporation status. So just going back to the presentation, with choosing the right entity, you definitely want to sit down and assess your business goals, the risk, and the long-term plans with the professional. Consider the scalability and the complexity of the business. All of that matters. So it may not make sense for you to initially start and say, yeah, I'm just throwing a random number, $50,000, this year. It may not make sense to be an S Corp because, like I said, there's additional requirements and guidelines that you have to meet as a business owner with becoming an S Corp. So for example, an S Corp owner, and this is one of the requirements directly from the IRS, one of the S Corp requirements for the owner is you're required to pay yourself a reasonable salary. So what's a reasonable salary in the IRS's eyes? There's no guidelines, but the point of it is, if you're an S Corp, you're saying this income is passive. So a reasonable salary should be paid to the owner in the form of W-2 wages. So you have to pay yourself on W-2 wages and pay your regular income tax and your FICA tax, Social Security and Medicare. So that's a major consideration when thinking about going to an S corp. That's why I tell clients, don't just jump when you're starting a business. Don't just jump into an S corp, because the IRS can come and say, well, no, you're not meeting these requirements. And, if you go through an audit or something like that, they can disallow the election, and you would have to go back and potentially have a huge tax liability for the for self-employment income tax. So in conclusion, the legal entity formation, it is a critical step in starting or structuring a business. Each structure has advantages and disadvantages based on specific business needs, and consultation with experts ensures informed decision-making and compliance. So I'm not sure who answered the question, but if you want to go ahead and ask your question again, we can kind of go into your situation as an example.
Okay, this is Janice. I have so many questions about where to file. What licenses we need, where do we file? Is there somebody that we can talk to personally? Whether, an LLC is filed in Lansing. Can you do anything at the Secretary of State? At your township? Go ahead.
Yep, I'm sorry. So one of the things, I am a partner with Oakland Thrive, where you can reach out to them and schedule personal time for a more personable consultation. But just in general, everything you can pretty much do online now. So you don't go to the Secretary of State to form your entity, and you don't have to go to Lansing. You can mostly I would recommend doing it online, or mailing it in, but I don't think a lot of people are mailing them in. The quickest way would be to do it online. But when you think in forms of forming an LLC as a sole proprietor, so one of the things that you want to consider is, are you going to be the only owner? What is your projected income? Do you want to start out, just in the simplest form, report income on your personal tax return and just pay taxes on that? One of the things that you also want to consider when you are a sole proprietor and, thinking in terms of forming an LLC, you also want to consider estimated tax payments. So, and that's in the form of quarterly estimated tax payments to the IRS, because what you don't want to do is get to tax season and you have this huge debt and you had no idea that you were going to have this huge debt. So you would want to work with your tax professional to, once you get that LLC formed, you want to start taking advantage of, looking at the income and looking at your expenses. And if you get to, say, the first quarter in the year, and you're like, oh, wow, I made a lot more than what I was, initially projecting to make, you want to work with your tax professional to calculate your estimated tax payments throughout the year. So you want to pay 4 quarterly tax payments. And that's how most sole proprietor LLCs operate, because you'll also get penalized if tax season comes and you have this huge tax liability that you weren't sending in estimated payments for.
Another question.
Sure.
The registered agent, how does that work and what do I need that for?
So a resident agent is mainly for businesses that does not have a physical presence in the state that they are registering their business in. And I think it's a misconception. You can it's a couple different ways that you can look at this. So if you don't want to use yourself as, hey, I'm the resident agent, like the business owner can be their own resident agent. You don't necessarily have to pay someone to be your resident agent unless, so we're in Michigan, say I wanted to form a presence in Chicago, so Illinois. So Illinois says, okay, we need some way to get in contact with you. So you need a physical address if you're going to be doing business in our state. That's when I would pay a resident agent in Chicago if I'm forming a business in Chicago, in Illinois, I'm sorry. So you're in Michigan, you have a physical address, you can act as your own resident agent. Does that answer your question?
Yes, I thought it was a necessary thing to have a registered agent, but
It's
I
not.
can, okay.
You can act as your own resident agent, because I know there's a lot of companies that charge a fee for being a resident agent, but you as the business owner, if you're in Michigan, you don't need a resident agent if you're forming your business in Michigan.
What if you don't want to use your home address as your business? Can you use a PO box?
So you, in Michigan, no, you can use the PO box as a mailing address, or you can use, and I know I think it's UPS, I believe they have where you can pay a monthly fee for a physical address that you can actually use.
That's good to know.
Yeah.
I guess I just don't know where to start because I don't want a business that's, going to be in debt, nothing. I just don't know where to start. And when you say, well, you can file online, but the thing is, I don't know what to file first, actually.
Yep, I recommend that you reach out to someone at Oakland Thrive and get a consultation set up.
I would love that. Is there a fee for that? I'm definitely willing.
Janice, this is Emily Rohrbach. I am with Oakland Thrive. I'll even
Hi.
put my camera on here.
Thank you.
Yes, there's no charge to connect with an Oakland Thrive consultant. Drake Pfeiffer, who was in here first, is an Oakland Thrive business forward consultant, and he or whoever is in your local community would be able to help you. Where are you? Like, where is your business located, or where are you located?
I'm in Clarkston.
Okay, perfect. So I just have to double check who the person is in Clarkston, and then we can have them reach out to you to start talking through some of these
so
things.
Wonderful.
And then the other thing is, if you look in the chat on this page, Chelsea Stein, one of the other guests here today, put in that on Oakland Thrive's website, there is a FAQ page. And it has a good place to start with some FAQs, some facts about where to start for your small business. Like, do you need a permit? Do I need to register my name of my business? Things like that. There's some little information on there with links to places where you can start your online process.
And where do I retrieve that?
Do you see on your screen, there is the controls at the bottom. One of those it says chat.
No, I don't see that. All I see is just the conclusion and you or my photo if I'm talking. I don't see any chat. No.
Let me see.
Can you see me physically?
I can see your photo, your
I thought you could see us as well.
I can just see
Emily, this is Chelsea. I'm the person who put the few things in the chat. I will say on my end, it says I have only chatted that to the hosts and panelists. I have no other option to chat it to everyone, I don't think. So you might have to share that with everyone.
Yeah, we'll change this to everyone here. Thank you.
I am so willing to pay a fee. You deserve it.
No, Oakland Thrive is a nonprofit organization. We are tasked with helping small businesses in Oakland County with some of these services free of charge. And when you start with a business forward consultant, you'll get, they'll help you get on your feet, get started. And then at some point, if you're ready, we can even start to pay for some one-on-one services with wonderful people like Leslie Jones and others who are out there that can help, take a couple of
Wonderful.
hours to actually do some of the work that you might need. But the best place to start is with one of our business forward consultants. And so
Wonderful.
Janice, you registered for this
Yes,
webinar, and so I should have your email address, and I will
yes.
have our business forward consultant from for Clarkston reach out to you. Okay.
Oh, thank you so much. Thank
You're
you.
welcome.
Sorry to interrupt.
It's okay. Leslie, back.
Yeah, so I just went through the basics of everything. Did anyone have any other questions or anything that they wanted me to expand on as it relates to sole proprietorship, LLCs, S corporations?
I had one question. With regards to the LLC, I know I'm out here in Pontiac. I went out to Oakland County, and I think they told me that you have to register with the states. I just wanted to confirm that. I think one of the workers was telling me that you only just did a DBA out of Oakland County, and that you had to register with the state with your LLC.
Yes, that's correct.
Okay, great.
Yep, and the website it's Michigan, I believe, Lara.
Mm-hmm. Oh, the licensing, yeah, the licensing. I'm Michigan Lara. Okay, thank you.
Any other questions on the LLC or the S corp or any of the entities?
Well, I can ask one more question. I guess it's addressed to the Oakland Thrive representative. Are they available to help set up an LLC, or do we just go do it on our own, or just go another route? I mean, are they able to at least advise anyone?
So
Get back on the screen here. I will say I'm not a business forward consultant. I host the events, so I don't know all of the details exactly what they could do for you. But I think they can, at the very least, kind of walk you through those first initial steps. They've also got lots of resources there that they can connect you to with people who there are some organizations that work with just startups and some that work with like already established businesses. We tend to work more with established businesses, but we can help you figure out like where to start and connect you with either a different resource to get you off the ground or, help you through those initial steps so that you can do that and then come back to us.
Okay, that's fine. Thank you.
And is this, Thomas, do you have a connection with a business forward consultant already or no?
No, I don't.
And what you said you're in Pontiac?
Yes, in Pontiac.
Okay. I'll have our business for Pontiac, who's Jonathan Sanctus, reach out to you.
Okay, thank you.
You're
His name is
welcome.
Jonathan. You said Jonathan.
Yeah,
Okay.
I'll have him reach out, okay?
Okay, thank you.
all right. So I'm just gonna go back and see if there's any other thing that I wanted to touch on, or if anyone had any additional questions. We talked about sole proprietorship, the tax effects. One thing that I did want to point out is the difference between, because I know I touched on the estimated taxes for a sole proprietor versus that passive income piece. And that's one of the key things that you would work with like a tax professional to determine when you're planning to form that entity. So the sole proprietor, when we do those estimated taxes, the estimated taxes cover your Social Security and Medicare, which is FICA, plus your regular income tax rate. And so that's why a lot of people will say, oh, I want to go to do the S Corp, because the S Corp, the income is going to flow through at the passive income tax rate, which is lower than that self-employment tax rate. But at the same time, the requirements are a bit more higher than being an LLC. So that's why a lot of businesses have been swaying toward that S Corp. But just make sure, if you even consider moving into an S Corp, because I see a lot of clients want to rush and do the S Corp, but there's a lot of requirements that you definitely want to make sure you're in compliance with, when dealing with the IRS and meeting all of those requirements. And I did want to clarify something. I mentioned about the partnership with forming those articles of organization. One of the documents for defining all of the terms is going to be in your operating agreement, which accompanies the articles of organization with the partnership. So it's going to be the operating agreement instead. Any other questions or comments?
I have a comment. I appreciate you very much, and I will be contacting you. Thank you very much.
Oh yeah, no problem at all. I can tell you a little bit about myself. I've been doing this for about 6.5 years now. I started, when did I start? So, it was probably 2018. And when I started, I just started doing taxes, and I was working a corporate job in my business. It just kind of grew. I help small businesses, I help individuals. One of my specialties is tax planning. I also provide accounting services for businesses. I help business with their financial projections when it's time to get lending. I do everything, basically audit. I'm located right in West Bloomfield. Yeah. So that's
It's wonderful. Wonderful.
Thank you. Any other questions about legal entities or general questions?
Well, I have a comment about the legal entities. I appreciate you taking the time to explain to us the differences between, the LLCs and the S corporations, because it was kind of confusing at one point. And then also the tax liabilities and how to set those up. So I'll definitely follow up with Oakland Thrive so they can connect me with somebody so that I can start setting those things up in a proper manner. So I appreciate that, and I thank you very much.
Oh yeah, no problem. That's one of the things that I see a lot with LLC companies that are mainly sole proprietors. A lot of LLC sole proprietors, they do really well, but they forget those quarterly estimated tax payments. And then we get to tax season, and then there's this huge tax liability. So one of the things that I like to encourage, and I just try to stress with clients, have conversations with your tax professional throughout the year. Taxes is especially for a business owner. Taxes is not a one-time a year thing. It's just not. You want to have conversations several times a year just to say, okay, hey, I got a new contract. I'm going to be making an additional 30,000. How should I plan for this for tax season, for when taxes come around? So those are a lot of things that you want to consider. And in doing that, you're being proactive, and instead of paying that large tax liability, you can say, well, I can make some investments back into the business with maybe equipment or things like that, as opposed to paying the IRS additional taxes. So
Okay.
I definitely encourage being proactive and having those conversations throughout the year, because it's definitely important. And a lot of times you don't, like, I don't want my clients to be surprised when tax season comes and say, oh my gosh, I owe, thousands of dollars in taxes. I had no idea. Like, we should know upfront, okay, this is what our tax liability, and then make plans to make adjustments so we can lower that tax liability. Because a lot of times, once you get to tax season, it's too late to make any changes. So yeah, no problem.
Yeah, thank you for that information. That's vital.
Oh yeah.
Hi, this is Chelsea Stein again. I guess I'll just ask, I'm just starting out as a sole proprietor. Really just kind of got up and running a couple of weeks ago. I feel like everyone that I've asked for advice was saying, do an LLC, just jump right into that. But in my own research and, whatnot, it just sounded like sole proprietor was the easier, like you said in your presentations, the simplest formation. And I just thought for where I'm at right now, I'm looking to just kind of freelance communications and PR and consulting. So as I'm kind of getting that up and running while I still work full time, I just wanted to keep things simple. So just curious if you had any tips or tricks for sole proprietors specifically, anything I should be aware of, as I'm literally just a few weeks into this.
Absolutely. So you can still be a sole proprietor LLC. And the only difference is, because you're going to report everything the same way, you'll just have a little bit more of limited liability from the company. With me and PR, it's not huge, risk and things like that, but it wouldn't hurt. Like, being a sole proprietor, it wouldn't hurt. Your tax liability is going to pretty much be the same. It just provides a bit more protection as far as the debts of the company, if that makes sense. So it wouldn't hurt.
Mm-hmm. Okay. And I think what maybe stood out to me was like the cost to start it up. So if I understand correctly, like starting an LLC would cost more than starting a sole proprietorship, correct?
No, because as a sole proprietor, you're a disregarded entity. You're a disregarded entity. Did you get a separate EIN number?
Yep, I've got an EIN and a DBA.
Okay. So when you got the EIN number, I'm pretty sure the IRS sent you a letter and said, okay, for tax purposes, you're a disregarded entity. To set up the LLC, you would only need to file papers with the state of Michigan, which I believe to set it up is like $50. It's no more than $50.
Okay.
There's no other cost with starting that LLC.
Okay.
And when you got the EIN number with the IRS, did you put in your company name, right?
Correct. Yep.
Yep. It's not extensive costs. There's no separate reporting requirement. The only reporting requirement specifically for the LLC is annual reporting with the state of Michigan. And it's basically just to say, hey, I'm still in business.
Mm-hmm.
And I'm still in good standing with the state. And I believe it's like $25 every year.
Okay. Okay. Cool. That was really helpful. Thank you so much.
No problem.
I have a question.
Okay.
A license to sell, can you acquire that at the Secretary of State?
So a license to sell, are you thinking in terms of registering for sales tax in Michigan?
I suppose I need to.
Yep.
I believe you have to have a license before you can actually acquire an LLC is the best. You have to have a license first.
So it just depends on your nature of business. So you can form an LLC, and it just depends on your industry. So if you plan to sell products, then that's when you want to start considering where are you selling the products? Are they going to be online? Are you going to have a physical location in Michigan? Or is it just going to be by order only? And I, drop products off, that's when you want to start considering sales tax. You would register for sales tax in Michigan, and you would do that with the Michigan Department of Treasury.
Okay. Another question, insurance. What is the best option as far as an LLC, a sole proprietor? What is the best option to cover yourself personally, to separate yourself and your own person from your business?
Yep. So that's the purpose of the limited liability company. It provides just a limited liability where your stuff is completely separate. So if someone tries to come after your assets, it would be limited to, the company. As far as having additional insurance, I would recommend reaching out to an insurance agent. So for example, I have general liability, and I have workers' comp, and then I have some type of professional insurance. But one of the popular ones is I think it's general liability insurance. And I think that's just for general business. I would recommend and I can recommend someone too if you want to speak to an insurance agent.
I do have an insurance agent. Can you just get it through your, like State Farm?
Absolutely. Yep.
Okay.
And I would just ask about the different type of businesses insurance. But I think from what I'm hearing from you, you probably would need general liability. But I would definitely recommend speaking with an agent.
Yes, thank you.
Yes, is it possible to get the agent's name that you're referring to follow up with them about the general liability insurance?
Oh yeah. So I use Candace Ecton State Farm.
Candace who?
Candace Ecton.
Okay, State Farm, okay.
Yep.
Thank you.
No problem.
Now that State Farm here in our area in Michigan and
Yep,
in
she's
Oakland,
located in Michigan.
the Oakland County area.
Yes.
Or do
Well,
you?
I can't remember where she is, to be honest.
Oh, okay, I can.
She might be in Ferndale. I think she's in Ferndale.
Uh-huh. Okay, thank you.
No problem.
Is there a contact number or just Google her or?
Yeah, I would just Google her. I have, let me see.
I don't want to take up too much of your
It's
time.
spelled Kandis
Yes.
Ecton, and she is in Ferndale.
Yep. Okay.
And
Yeah, they were really helpful for me.
I'll put a phone number in the chat.
Thank you. Okay, I see it. Thank you.
Yep.
Any other questions or comments? You guys
Yes, I have another one.
Okay.
I have a business name right now in Oakland County, but if you wanted to sell something out of Oakland County, does that mean that's the time when you get an LLC? Or I haven't acquired a license yet, but I do have a business name. How far does that stretch for Oakland County only?
Do you have an EIN number?
Do not.
Okay, so I mean, typically when you have a business name, you're pretty much operating as a sole proprietor.
Wow.
Everything is going to be reported on. I always think in terms of how are you acting? How are you going to report this to the IRS? Where are you reporting all of your income and your business activity? So you're pretty much a sole proprietor.
Wow. So when I filed for that, she asked me, she says, do you want to be an LLC? And I said, at the time, I said no, which means I'd have to do that with Lansing. I was assuming that I could not sell out of Oakland County. It was only for in the Oakland County area only.
So Oakland County doesn't necessarily have like Michigan handles all of that. Michigan handles the sales tax license. The only thing that you would be responsible for in Oakland County is like, so say you have this business location, you have this you're responsible for like a personal property tax. So if you have all this equipment, or if you have some stuff that you use within business, you have to report to the county, which is mandated by the state, like all of those personal assets, and then you have to pay a tax on them every year.
Thank you.
You're welcome. But everything for the most part is it's gonna be regulated by the state.
So if I wanted to take that business name I have within Oakland County, now I want to acquire the LLC with that name, would I just file that separately, or can I add it to it?
You can add the LLC to the name. So you'll just apply for to be a limited liability company within the state of Michigan.
Do you recommend doing that, or I just need to come and talk to you, I suppose.
Yeah.
I
I
will.
mean,
I
just hearing
will.
what you're saying, likely yes.
Okay. Thank you.
I'm trying to think of any other instances that I see with clients. So one of the things that we also want to consider is, when we're starting out, especially if we're starting out, the IRS has started to call it a gig work. The gig work needs to be reported. When you form the LLC and you're a sole proprietor, if the business, if your business doesn't do, if you say, well, I'm gonna just work for another year and then take a break from the business and maybe work somewhere else and just have W-2 wages, but then you still have your LLC company, there are no other requirements outside of just filing that annual $25 report, just letting Michigan know. But if you become an S Corp and say, okay, I'm gonna still take a break, you still have those requirements to file an informational return with the IRS. So that's one of the other things that I see. Sometimes clients, they come in strong and say, hey, you know what, I want to be an S Corp, I'm going to do this, I'm going to do that. Or even, with forming a partnership, but then they say, well, business was slow this year, I had nothing going on, so I didn't file last year. That's a huge mistake. Because you still want to file those returns, and just, even if it's zero, just submit a zero return to the IRS. With the LLC, there's no separate filing that you have to do. Just file your normal tax return if you're required to file, if you meet the income threshold, obviously. So, that's just one of the different requirements with both having an LLC and an S Corp that you want to consider when transitioning over. Because you definitely don't want to get the IRS will, they'll give failure to file penalties, and they can be extensive. Any other questions or concerns, comments, feedback?
I appreciate you very, very much. And I'll be looking for the emails for contacts.
Most definitely. Thanks everybody for joining today. This was great conversation. I definitely appreciate it. And I hope
Thank you as
everyone,
well.
yeah, no problem. I hope everyone got all of their questions answered.
You're a blessing for me. Thank you.
Thank you very much.
No problem.
Thanks everyone for joining. I'm going to share my screen super quick just so that you guys can take a picture of the QR code and let us know how you like the webinar. Can you guys see my screen?
Yes.
Okay, perfect. So if you take a picture, hover over your camera with the QR code, you can take that survey.
Oh, let me hold on. Ah, man. Okay. Got it.
All right.
I also put the survey link in the chat if anybody wants to use that instead. We thank you all so much. Thank you, Leslie, for joining us.
Thank you,
And,
Leslie.
Thank you, Leslie.
We have
Thank you.
passed on everybody's contact information to our business forward consultants. So you may hear from them just to check in to see if there's anything else that you might need. Those that spoke today, Janice and Thomas, you requested specific things, so I sent those out already. So you know, please, if you need anything from Oakland Thrive, if you need any support for your small business, please don't hesitate to reach out. Our services are all free to any small business in Oakland County, so please do reach out. Thanks so much for
Thank you.
coming.
Yep, thank you.
Thank you very, very much.
Bye-bye.
Okay.
Bye.
Bye-bye.